Forex exchange market is the largest market that sells and exchanges the currency. The concept for the Forex and Forex trading is changed and kept on changing for its improvements. It is the work of the bank, but now it is given to the private owners. The bank has given it to them because technology is very advanced and they pay them the necessary infrastructure. The banks sell and purchase the Forex trader at higher prices and sell them at lower prices because you cannot sell vice versa in this market. Spread is only paid to the market and that is the main earning. This currency Forex exchange is categories and two currencies. First is base currency and other is quote currency. The spread is the difference of the bid and ask price of given currency. The brokers apply the altered quotes on the transaction fees and earn lot of money. Forex do not know any rules and regulation because SEC cannot apply any type of regulation on it. SEC regulates the orderly market, so it is the non-regulated market. The innermost privates are the commercial banks that are now in the topmost banks. Pips are the large digit of quotes. The currency trade with spread available is usually within 1 to 5 pips. Your USD bid and ask quote may vary among 1.3000 to 1.3001. It is having the spread of 0.01%. Most of the currency quotes are purely driven by the supply and demand. Usually the USD hit divert from its direction for a second or minute. When the spread widens or worse, you will not let you in at all. This is market, where the market maker has the compulsion to the honor trading to supply the quotes. He will let your order hand until the price slows down. The brokers also make threat. When the market price slower downs, they will shift the quotes in the direction of the trend, make their markup, and delay the execution. After waiting for some time, it will give lower price that occurred meantime. Some of the broker just shut down their server and do not distribute the information and say that there is some technical problem there. Broker does not want to give the news to the customers. The broker does these types of manipulation and therefore is a big market player. The customer should be beware of those brokers. They can trap your money from the lines of resistance and create the technical signals for breakouts. The bank must get some other sort of advantages, but the customer might get the inevitable loss. If you are dealing with interest, then the accounts are reduced or increased with the interest rates. For the slower trend, the betting option is good for a price change. The weak currency comes with the high interest rates. There must be a comparison between Forex and stock market, but there are many more good options in the stock market better than Forex. You can be exploited in some medium-sized trends and technical analysis. In short, Forex is just having no motors. Everything is having its pros and cons, so Forex is also having the demerits. You are left with a risky entry and you will get your money after very long settlement. It is the easy cash cow for the banks, so the Forex is running just for their benefit. The new traders should keep in mind that you should focus more on currency pair, market size and liquidity. The foreign exchange market is unique because of the following features: trading volume, the extreme liquidity, the large number of, and variety of, traders, geographical dispersion, long trading hours, 24 hours a day, except on weekends, the variety of factors that affect exchange rates. Average daily international foreign exchange trading volume was $1.9 trillion in April 2004 according to the BIS Study Triennial Central Bank Survey 2004. $600 billion spot, $1,300 billion in derivatives, $200 billion in outright forwards, $1,000 billion in Forex swaps, $100 billion in FX options on the spot market. According to the BIS study, the most heavily traded products were Euro, USD -28%, USD/JPY -17%, GBP, USD, also called cable -14%. On addition, the US currency was involved in 89% of transactions, followed by the euro, 37%, the yen, 20%, and sterling, 17%.